Of course, we've been talking about the vaccine news that has hit this morning. Both the fact that the Pfizer BioNTech coronavirus vaccine is now begun to be administered in the UK and the full release of the documents associated with that vaccine, the FDA saying that they confirm it is safe and effective. What effect is all of this going to have on the broader markets? Let's bring in Jeff Kleintop. He is Charles Schwab, Chief Global Investment Strategist. Jeff, it's always good to see you. How are you thinking about vaccine rollout? As we were talking about earlier in the show, some strategists are looking at the potential and saying maybe there's even more upside than we are predicting if things go off sort of without a hitch.
Yeah, well, that's the key if they go off without a hitch. And we can talk about some of those potential hitches. But I think the real bright spot, if you look at the upside of the economy and earnings next year, isn't really in the S&P 500. We may be looking in the wrong place. It's overseas. When we take a look at where the real potential for an earnings rebound is, it's really concentrated in Europe. When you take a look at the numbers, Wall Street analysts are revising their numbers higher. They're doing most of that in Europe. You're looking at numbers 35, 40, 45%, in some cases 60% year-over-year earnings growth in countries like France and Germany. So that's great news. Their valuations are also quite a bit lower, but you combine that with more room for profit margin expansion, maybe leadership by financials, which is the biggest sector for the EFI index, and in Europe, a weaker dollar boosting returns measured in dollars. And then you've also started to see international outperformance here in the fourth quarter. And technically that actually began back at the end of April, where we started to see this new cycle begin. I think this cycle is going to be much more about international than US stocks, something that could catch a lot of investors by surprise.
Jeff, before we touch upon that, you did write in your recent note, you expect a near-term double dip. I assume that's the economy double dipping. What would that mean to the market?
Yeah, well, it depends how long it lasts and how deep it goes. And that's why I think we're seeing a little bit of softness today. We've got this period from now until we see mass immunizations in the spring, if everything goes well. And that means we're in lockdowns 2.0 in a number of states and a number of countries. That could turn into lockdowns 3.0. We just don't know what the economic damage is. These lockdowns seem to be less stringent than those put in place back in the spring, in terms of manufacturers generally being left open, schools generally being open, but that could change. And so we've got to keep a very close track in terms of how effective these lockdowns are in containing the breakout of COVID until we get to those mass immunizations. Again, double dip in the data is almost assured in December for some countries like France, for example. But could we see more in the first quarter? Yeah, I don't know. And that means maybe a more volatile period here before we really start to see those gains kick in, perhaps in the second half of next year.
Jeff, as you look at 2021 and the earnings picture there, the numbers are going to be quite good, but you know how this works, right? If they're not better than expected, well, then the market's going to interpret them as not as good. How much risk, I guess, is a lot of this great news, whether it's with the vaccine or, again, corporate results, call it Q2, Q3 2021. How much of a risk is that becomes a sell the news type of period?
That is a real risk. The market has priced in a lot of this recovery already. So I'm looking for areas where still valuations are left leaving enough margin that maybe they don't need to surprise by much in order to get a lot of a move there. And that's where I'm seeing more value-oriented sectors, areas that really haven't participated in much of this move in the market. Oh, maybe they have in November and early December, but really from, let's say, May to November, most value sectors, and I'm talking about industrials and financials, energy materials, really haven't done a whole lot. I think there's more room for the upside there. And again, those are sectors more heavily weighted in international benchmarks.
Well, we can't let you go without getting your take on Bitcoin here as it hovers near record highs. Any outlook for crypto space as it becomes more institutionally oriented?
Yeah, we'll have to see. I mean, it's interesting that there's more and more adoption I'm seeing as I'm doing my holiday shopping, maybe more retailers accepting Bitcoin as payment. So that's some sense that there's increasing acceptance there. But we'll have to see. I'm actually disappointed about blockchain. We really haven't seen a lot of developments there, adopting that as a new technology across, let's say, healthcare records in this very challenging period of time. And maybe that says something about the long-term viability of cryptocurrencies, but I'm not an expert.
All right, Jeff, thanks for coming on. Talk to you soon. Jeff Kleintop is Charles Schwab, Chief Global Investment Strategist. Appreciate it.